Chakri Lokapriya joins us now, and let's connect with him to get a sense of what he makes of the market right now. And Chakri Lokapriya, let's see what he's wearing. Blue or Indian jersey? No.
Yeah, come on, again, it's a blue only. It's
no,
an Indian.
Where is it blue? Dark blue. Come on. ये India blue नहीं है.
Yeah, that's an India color. So, yeah, thanks. It's great that we've had a win.
Okay, so do you think, so moving away from cricket, where do you see things are stacking up for the market? We've seen a dinky bounce from the recent low. Are we out of the woods?
You're absolutely right. I think we are out of the woods, because if you look at the valuation, currently it trades at Nifty 1 year forward trades at about 18.8 times, close to 19 times. The COVID lows was about 18.5 times. So is the market overall in a far better economic situation than it was during the COVID period lows? Answer is clearly yes. Companies, corporates, governments, everybody's balance sheet is far better. So therefore, I think, with the RBI interest rate cuts, a couple of more lined up, as well as recent income tax cuts, all of this together will kind of reinvigorate, pockets of capex as well as, consumer. So given that, I think, yes, we are very close to the bottom, and one would clearly benefit from start buying here.
Right, okay, that's the word coming in right now, hoping for a rebound, and it seems like the markers at least are set for a sustainable one. But Chakri, there is a lot of heightened talk about GST rationalization, the finance minister dropping big hints over the weekend that perhaps a slab change is going to be in the offing. Do you think that's going to definitely, mark a bottom in terms of demand? And of course, thereby it's going to reflect on equities too.
Clearly, yes, you're right. Because, one, if you look at the recent income tax cuts of the 12 lakh, people who have an income of about 12 lakh. So, all the GST products which come in that band, the affordable products, I think I would guess are the ones where they would see some kind of cut. Clearly not the luxury products. Given that, and also, I think, given that automobiles and tariffs and Trump tariffs are going to impact the automobiles above that $40,000 mark. Clearly, there's unlikely to be any GST reduction above that. So yes, I think the common goods items we will see, and therefore that will help some amount of discretionary consumers stay. Staples, I'm not really sure. So AC is yes, surf no.
All right, so let's watch out for some of those stocks there. But other than that, today, let's also look at some of the metal counters, because in the week gone by, metals have done really well for themselves. And today we have a brokerage note as well, wherein Hindalco as well as JSW Steel. Other than that, Tata Steel are going to be in focus, as Jefferies has come out with a note where they have raised the target price on Tata Steel to 180 rupees, a target price raised on JSW Steel as well, while Hindalco, they retain a buy with a target price of 800 rupees is what they are saying. The Asian steel spreads remain 20% below the long-term average and has a scope to expand is what they are highlighting. But Kunal, amongst the three, any of the stock that is standing out for you within the metal pack?
So Tata Steel is the one which is strongest on the charts because of the way the stock has recovered from that 115-20 lows from the recent time frame, as well as the the intensity in which the stock price has moved up higher. So on both of these attempts, the stock has done reasonably well, and so one of the few first ones to try and come back from being at a 20% plus divergence from its long-term averages to break past about this 200 DMA. We've seen the volume pickup also being very strong for Tata Steel in this leg of up move, 20% up move from the recent swing lows, and more importantly, the stock has confirmed a pattern of higher highs and higher lows consistently in the last 1 month of this recovery. So I think on the back of this is one of the strongest name. My expectation is that the stock should be heading towards a retest of the previous major highs of 180, 184 plus mark.
All right, so let's watch out for Tata Steel. But Chakri, help us with your take on the defense pack, because though of course there has been a valuation concern and off late we have seen all of those stocks correcting, but in the recent trigger we have the European Commission announcing a major defense initiative, and some of these Indian companies also do export to these markets, do cater to European clients, and some of the stocks are also holding up well. But do you think that maybe it's a time to rethink and reconsider some of these defense pack?
Yes, indeed. As you pointed out, post Trump, about the current stance on the Ukraine war has led to a major rethink among long-term spending on defense by lots of European countries, UK included. And so that is clearly going to help Indian defense companies. All the largest will anyway benefit: Bharat Electronics, Hindustan Aeronautics, and also the much smaller ones as well in components for the defense industry. So, the stocks have also corrected, but why did they correct? They corrected because of uncertainty of long-term growth rates. Now, with Europe looking to spend over the next 10 years, those long-term growth rates, again, are likely to be revised up.
All right, so let's watch out for Bharat Electronics as well as some of the other counters that Chakri just highlighted, because they are indeed having a decent run-up, wherein Bharat Electronics and even stocks like HAL are holding up well. And today, of course, we have a note coming in from ICICI Securities, where they have retained their buy on some of these stocks like Dynamite Technologies, Solar Industry. So let's watch out for those briefly. But other than that, let's also look at Reliance, because that has been one of the key movers today. Movers in the week gone by, rather. It's almost a 6% jump that we have seen on Thursday as well as coming in on Friday. But Naresh, help us with the levels to watch out for Reliance Industries. Do you believe that there is still some headroom for more upside even from these levels?
So a very strong comeback in the last three sessions. After breaking the 1200, 1220 mark, which was a support for the last almost 3-4 months, the stock gave a one-day downtake and did not sustain. And this recovery, we are back above the 1220 mark as well as the last 1 month high. Now we are back into the range wherein we go back towards the 1300, 1330 mark. So there is still some more, place left for it to catch up. But even after that, it would still be a major underperformer even after 1330. So out here, expecting this could be a false breakdown and it would surprise on the upside. Remains a buy on dips now with a stop loss at 1200.
Okay, that's that coming in on Reliance. In fact, there's a decent upgrade which came by last week, wherein Macquarie has upgraded Reliance to now outperform, noting a series of incremental positives over the next 6 to 12 months. They're also saying that they expect a better earnings momentum as well from RIL and potential spin-off events to support Reliance's share price. 1249 is where the stock shut shop in Friday's trade. They're also saying that the share has underperformed MSCI India by 18 basis points and Bharti Airtel by 60 percentage points over the past 1 year, and we're now upgrading Reliance to outperform, noting a series of incremental positives like I highlighted over the next 6 to 12 months that they do expect in the offing. Other than that, some of the other buzzers from Friday, other than Reliance, of course, there were some of the specialty chemical names which actually held out quite smartly. And Chakri, other than financials, even specialty chemicals, many in the market believe could be an interesting pocket right now. Tell me, of course, your thoughts on specialty chemicals, and where else do you find value to buy right now in the market?
But specialty chemicals, the kind of conundrum right now we are in is everybody is now talking about the new date, which is April 2nd, when Trump announces the next round of tariffs. Now, in that round of tariffs, it's likely that, some of the Chinese companies, chemical companies are likely going to be impacted. Now, if that happens, then companies like PI Industries, UPL, these companies would benefit because they make some of those products which there would be tariffs on China. Second, the underlying demand itself from US and Europe is still very sluggish. So that probably will take another quarter or two. Valuations for all these stocks, specialty chemicals, have corrected quite a lot. So while this April 2nd is one catalyst, I think longer term fundamental uptick will take a longer time. So I think worth watching, but not really buying into them right now.
Newsmakers today, we will have our eyes on Tata Power, as well as one of their arms has actually signed an MOU with Andhra Pradesh government to develop 7,000 megawatts of RE projects. And Chakri, off late, there are reports highlighting that power demand is once again expected to rise from here on. And even a reporter also highlighted that the government has now started to focus on the coal in store right now. There could be some coal shortages in the times ahead, and they are prepping up for that. So Chakri, do you believe that it is a time to once again look out for some of these power related counters which could have a decent run up in the short term, and anything that is looking interesting to you?
Yes, indeed. Power companies have, stocks have fallen on the back of, a slowdown in power consumption, power demand, and that power demand slowed down because of a slowdown in, production by factories and by factories. Now, again, the opposite will happen in the sense that as in RBI cuts rates and production economically, cyclically recovers, and then productions, etc., power demand will also rise. And also given that, with the Trump de-emphasis on green renewables, green energy and renewables, and India is again importance to thermal. I think all that because the various treaties come into force many years later. So long story short, I think thermal companies and non-thermal companies will come back in demand. The easiest way to invest, I would say, is through the power financiers like Power Finance, REC, because they finance both thermal and non-thermal.
Right. Okay. Chakri, great to have you on the show. Thanks as always for joining in today.
Thank you.
Okay, let's.
If you like this video, then like, share and subscribe to ET Now.